Welcome to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to loan expert here in Las Vegas. And I'm here today with my friend Chakits Krulsawat from Simply Vegas. What's going on today, Chuck?
What's going on? We're about to give you guys a great show, guys.
Also, I wanted to throw another shout out to Doug. He's our producer. Doug, how you doing today, man?
I'm doing good, sir. How are you?
Whoa. Talking about that, Doug. Who won last week? Lender versus realtor face-off.
Well, if you remember correctly, you both got disqualified.
Yeah, but you were supposed to tell us why.
Oh, I will tell you why right now.
Okay.
See, at first, Chuck, you were going to win it because I caught Dan blatantly using enhancement materials. I saw him drinking his little energy shot and his fancy bottle of water while he was on you. But then you blatantly, openly said you were on Red Bull.
Oh,
so
man.
that disqualified you too. So you both.
I think Doug's on to us.
Okay.
Come on.
It's always a pleasure to educate the Las Vegas community. I wanted to throw that out. And Doug, thanks for your input on that. We were always, for about a week, we were really finding out who won that. So appreciate that. We got a great show for you guys today. Chuck, how you doing today, man?
I'm doing wonderful. We're here on a Sunday, and we're about to give you guys a lot of great content.
So let's talk about some things going on, news and events. Let's start with yours. What's going on with the events that's going on here?
All right, we'll start off with the Ogden. They're spending $2 million in upgrades. Now, the Ogden's located in downtown, which is in the zip code of 89101. And remember, we had this discussion about all this money that they're putting down into downtown. Well, this building is 21 stories. 21 stories. And it has a total of 273 units in this building.
Wow.
And they actually got foreclosed on in 2013 in December. It was actually bought by a company of NorthCap, one of the companies out here, and it was actually part of a portfolio of 5 properties, which was actually the Jewel, the Loft, the One Las Vegas, and also the Spanish Palms. Okay. And also, this $2 million that they spent, they did all the upgrades inside, and which now they are selling their units anywhere from $230,000 per 815 square feet and up.
Wow.
Okay.
That's pretty good information there, Chuck.
I was actually stumbling there. I was a little bit nervous.
No, you're good, man. So here's the thing. We also have March Madness going on. Did you sign up for a bracket with March Madness?
I have no clue about basketball.
So listen, I tried this week. I was like, you know what? I'm going to sign up. This is the first year. Every year they're telling me, hey, sign up for this. You know, start the process and kind of get involved. And it's with my company. And
are you winning?
No, here's the funny thing. So I'm like, all right, I signed up, and I think it was Thursday. At the end of Thursday, I was in 3rd place.
Wow. What are you at now? What are you at now?
I'm like 30th. So
that's better than 31.
But
right?
it's bringing a lot of people here. You know, it's funny because I was looking at it, and one of the guys from Red Rock Casino, you know, he's Jason McCormick. This gentleman said that they actually get more reserves for March Madness than they do for the Super Bowl.
Do they really?
Yeah. I didn't know it was that big either.
That's crazy.
Yeah, so it is crazy. So I also want to talk about there's a thing going on here with the CFPB, and that's
what is that?
Consumer Financial Protection Bureau.
Okay. What's that about?
And what it is they have on their website, they have a mortgage calculator, and the mortgage calculator is giving out interest rates. And there's been some information in the news lately that this calculator is giving out wrong interest rates.
Is it kind of like, you know those apps where you have like Zillow and Trulia?
Yeah.
I notice every time I input a certain amount of interest rate and the year amortized, it's actually different. It's never the same.
Yeah,
is that what?
Yes,
is that what that is?
It's exactly what it is, and I think there's always confusion because everybody just punches in what they think their payment or their information is. Hey, I'm gonna put this. I want this amount of home, and they just give you really principal and interest most of the time.
How do I get an accurate number?
Well, the way you do it is really you have to call me. Okay, and the reason why is because I'm really going to give you a detailed payment breakdown. It's going to have your taxes, your insurance, your hazard insurance. You know, it's going to have the accurate information as far as interest rate because here's the thing with that. Everybody's different, especially with conventional loans as far as where rates are at and how they're priced out. So to get an accurate payment, I mean, you're always going to have confusion, but I thought that was pretty ironic that you know, they govern us as loan officers, and people are complaining that there's interest rates on there that they're not giving out the right interest rates.
Wow. Hey, did you hear about that Pacquiao fight with Floyd Mayweather?
Yeah, I heard about it.
Well, here's the thing. I was pulling up the MGM. I can't believe the rooms actually got booked out. About 98% of them. You know how much they're going for now?
What's that?
$1,600 a room. And I was reading
$1,600
a room. The funny thing about it is, I was like, hey, how much is this guy actually making? $200 million for a fight for Floyd Mayweather.
But he has to win, though, right?
Well, if he wins, he gets $200 million.
$200 million.
If it's a split decision, he gets $120 million. So Floyd, if you out there right now, I'm calling you out now for $1 million. Let's get this thing on the road. Also, here's the thing. This is the crazy thing. I went on Craigslist to see how much tickets were going for. $10,000.
Okay.
Oh, that's crazy.
Now it's getting a little bit overboard, I think.
Yeah, it is.
So let's go ahead and talk about also that came in the news over the week, Fannie and Freddie. These are government sanctions, and what they're thinking is, or what they're looking at is that these they will continue to shrink as years ahead, because the reason why is because the Treasury Department for bailout is starting to sputter. So what it's saying is that they could potentially start to lose value for these entities, and they might end up going away at some point, and they don't see any type of direction of it going the other way.
So what does this mean for a buyer that's just tuning in?
If you look at it, they're giving us opportunity, Fannie and Freddie, to give us really just a wide array of financing options.
Okay.
And a lot of that, and we'll talk about more, but a lot of that is coming from them because they're the ones that are actually purchasing these bonds.
Okay.
And if they don't have an appetite here in Las Vegas or at all, somebody's got to come in and purchase these bonds to keep the filtration of us, and the banking world, I guess you can say. Somebody buying these and then collecting them and then selling them. So they're a big part of the housing economy. And if they go away, it could cause a lot of grief.
Do you think they're going to go away, though?
Who knows? I don't know. Maybe. I think there's a good chance, because here's the thing. I haven't seen any recovery from either side of this, the Fannie Mae or Freddie Mac, stating that they're going to go the other direction. And until I see something change, who knows? So
if you're tuning in, you need to call right away.
And, I wanted to also talk to you guys. We have a great show. Doug, we're going to do the market rundown. And, Chuck, I wanted to talk to you about what we're going to go over the show today.
Market rundown.
We have housing market statistics. We got interest rates trending, breakdown on mortgage insurance. I'm going to talk to you about that. We talked a little bit about it on our payment here. Real estate step by step. Chuck's going to tell us exactly how he handles his clients from A to Z. Appreciation in Las Vegas. We're both going to discuss that. We'll finish it off with the lender versus realtor face-off. If you guys have any questions regarding the show, call in studio today at 257-5396. Chuck, I heard there's consultations going on for mortgage lenders out there for $1,000. You heard anything about that?
No, I haven't.
What
are you charging?
$999.
$999.
Yeah, it's a little bit of a savings.
Hey, so. that better not be on my hood.
I'm just playing. It's free, guys. It's free. If you want a free consultation, you can reach us at 702-781-6682. That's 781-NOVA. If you want to schedule a free consultation outside studio. And, Chuck, we also put together a series of educational videos. What is that?
Basically what that is, it's called Take Notes, and you can find it at simplyvegashomes.com. It's a bunch of educational videos with the professionals in the industry if you have any questions regarding buying, selling, or investing in real estate. Also, I do want to mention that we are now filming all our segments, so if you missed something from last week, you can tune in at simplyvegashomes.com.
Also, if you guys want more information on any previous shows that we had, maybe that you missed, you can always go to my website at danfrenchnova.com. You can review all the information on my website if you guys decide you want to proceed. And take advantage of rates, guys. I'm telling you right now, rates are low. You better take advantage of them. Who knows how long they're going to be until they get back to where they need to be, or until they start going up. I think in June, we're really going to start to see an increase in rates. And, take advantage of it now. I'm telling you, you guys have got to take advantage of this. Also, we're going to give away a free appraisal and a free home inspection. Free.
Why are we always giving away free stuff?
Well, I think with our audience, they have a benefit by listening to our show, and I think that's just a start of a benefit, and I think that's a huge thing to give away, and maybe get some of these people to call in,
I love free.
We need to get some more callers calling into studio today. 257-5396. Also, we're going to give away to the first caller. We're going to give away a free lunch for two to Sammy's Pizza. Yeah, I said that right. Sammy's Pizza.
Sammy's Pizza.
All right. So, Chuck, what's going on in the housing market?
With the housing market, you know, we bring it step by step, week by week, play by play, according to the multiple listing service, including single-family condos, townhomes.
Chuck, we got a caller real quick. I want to take this caller. We have Norma on line 1.
Norma.
Hello.
How you doing, Norma?
Good. How are you guys?
Good. What's going on today?
Well, I heard you guys can apply a credit to closing costs, and I wanted to know how that works.
Oh, that's a good question, Norma. What it is in some instances, I'm not going to go into detail, but as a loan officer, I get paid a margin, and anything that's left over from my margin, I credit back to all of my clients, primarily on FHA and VA loans, to offset some of the closing costs. And that's always changing because it goes with the pricing and it goes with rates and how they're priced out. So it's always different, but I'm going to tell you that in a lot of cases, we're contributing quite a bit to closing costs and helping people get into homes.
What's the average on that, Dan?
Again, it's different for everybody. I really can't say an average, but I can tell you if you called me up on a specific day and you said, "Hey, I only have X amount of dollars. I only got a down payment, and I need to get into a loan," I can tell you exactly how much you can contribute. And you know what? There's even options that if you don't want to just take off what is off of what I can provide, you can also take a little bit higher interest rate, but that's your discretion, and maybe we can offset a little bit more towards your closing costs.
Oh, okay. Sounds good.
Hey, Norma, real quick, we're going to have our producer, Doug, take your information down. We're going to give you that lunch for two to Sammy's Pizza. You timed it out perfect.
Oh, great. Thank you.
Thanks to Norma for calling into the show. And let's go ahead and move on. Chuck, what's going on in the housing market? Why don't you leave off from where you're at?
Single-family residents, according to the GLVR, which is the Greater Las Vegas Association of Realtors, and this only includes single-family residents, condos, townhomes, manufactured homes, duplexes, triplexes, fourplexes, and high-rises, not including land, new home sales, or for sale by owners. Overall inventory actually had declined by 7% in addition to a increase by 7% in sales since last week. So there wasn't that many homes that went on the market, but we actually sold some homes, okay? Now, for private sales, the inventory actually declined by 8%. In addition to that, actually declined in sales by 10%, but still holds 85% of market share today, okay, on the market. For short sales, the inventory actually declined by 1%, but increased in sales by 2%.
If you were looking at all this information, what's the one thing out of this that you would want to emphasize that maybe you'd want to tell them?
What this says is if you're a buyer and you're looking to get into a home,
right,
within 45 days, you're probably going to want to start looking at private sales.
Okay.
But if you have the time frame of 6 months, then you probably want to start looking towards short sales because you're not going to have that many offers on there.
Perfect.
And you're probably going to get probably about a 10% discount.
Perfect.
Okay?
Yeah.
Now, for bank-owned properties, bank-owned actually had increased by 20%. Okay, in inventory, and also increased in sales by 8%, but still holds about a 4% of market share.
A lot of increases, huh?
Of course. Okay.
Well, Chuck, thanks for the rundown. We also want to talk about where interest rates left off for the week, and I want to tell you mortgage bonds finished the week higher, which pushed rates lower. During the week, it's funny because bonds and rates kind of inverse usually, and in this case, they both went down at the same time. Okay. So, yeah, and it's a great thing because usually, you know, you look at the stock market and if it's going up, usually rates are inverse to that, but they both went to, you know, in the same direction this week. But I'll tell you, the committee anticipates it will be appropriate to raise the target range for federal funds, further improvement in the labor market, and reasonably confident that inflation will move back up to its 2% objective over the median term. So, you know, the Fed, if you look at it from last week's pricing, the Fed still not come to terms on when they're going to increase on rates, but they are going to do it. And I really think maybe the beginning of summer it's going to happen. Mortgage rates finished the week better about 1/8 of a point. So if you go back to the beginning of February, that's a good indication when rates really started to go up. We've lost about now 1/2 a point. Okay. You know, we were at a full point at one point, but now we've lost just about a half a point. And what the concept of the government is it's kind of a crazy concept that they're controlling rates at this point, isn't it?
Yeah.
So, but I'll tell you right now, it's an indication of strength. Once they see that the data will result, with strength in the market, I really think that's a real indication that rates are going to start to go up.
I don't think it's going to go up that much, though, is it?
Well, it's not going to go up. I don't think it's going to go up that much all at once, but I think it's going to gradually go up.
Okay.
Yeah, and I think it's going to be something that you're going to start to see. From what my indications are, I mean, none of us have a crystal ball, and like I said, I wouldn't be sitting here if I did. But if I really look and see what they're putting out here, I think the beginning of summer, they're really going to start to go up.
So do you think the Feds are going to kind of tick it up as it goes and kind of see what happens, and as the market stabilizes, they're going to increase it a little bit? And
yeah, I think once you start to see the labor, get better, the economy start to recover. I think they're going to give an indication that, hey, we're going to start to increase this a little bit more.
Like 18 points?
Yeah. Chuck, we got a couple of callers here. We're going to take the first one. Ashley. Ashley's on line too. Ashley, you there?
Yes.
Hey, how you doing today, Ashley?
Good. How are you?
I'm good. What's going on? How can we help you?
Well, I just had a question. I was listening to your radio, and I have on my credit it shows that I have a foreclosure.
Uh-huh.
So I needed to know, do I need to take care of that first?
Well, we got to find out when the transfer date was, because then we can set, if you're looking to buy a house, we have to set the parameter of time frame for you to get back into a loan. So if it's a foreclosure, I need to see how it's reading on your credit report. We'll look up the property, look up when your name was transferred off of that property, and then we'll set the parameters about when you can get back into a home.
Okay.
And the best way to do that, Ashley, is to call me outside studio, 781-6682. That's 781-NOVA.
And I'm also, when you're probably in that situation, you're probably going through some credit issues too, though, I take it, right?
Yeah,
you're going to have to go through the credit repair as well.
Yeah, and here's the thing too, Ashley. We have a free credit services, and that's a good point, Chuck. If other things that's on your credit is negatively affected, a lot of times with foreclosures, I'm not going to say every time, but with foreclosures, most clients or people that come and see me, they let other trade lines and other credit lines just go because the foreclosure has such a huge impact on their credit. And this is a perfect example for me to review your credit report. Let me see what's on there, and then if we have to, we'll get our free credit services department involved to help this out.
And when can you buy when you foreclose?
Well, it's dependent on what qualification. I mean, we have a program 1 day out of short sale foreclosure, but that's
nice.
That's a big down payment. I'd have to look and review that. But
Okay.
the FHA guidelines, which if you're not a veteran, the quickest amount of time is 36 months from transfer date off of that.
So
foreclosure.
the best thing to do is just to call in, and it's just case by case.
Yeah, call in and let me give you your options. Okay.
Okay.
All right, Ashley. Thank you for calling in.
Thank you.
Thank you, Ashley, for calling in, and let's go into our money savings of the week. Chuck, you ready for this?
I'm always ready for this.
Yeah, I'm ready for this too. So
there it is.
There it is. I got a guy that came in. This was last week. His name was Ben. He was looking for how much he could save off of going from a 30-year to a 15-year fixed loan. Okay, and what most people don't understand is that when you go from a 30-year fixed to a 15-year fixed loan, you're saving a ton of interest. Okay, you're saving a ton. Now, he only was paying on this mortgage for a couple of years.
Yeah.
So I broke down the payment. I broke down, what his difference is. And, his payment, because where rates are at, he would lower his interest rate.
Okay.
But at the same time, going from a 30-year fixed to a 15-year fixed, his payment's not going to adjust. It's not going to adjust it barely at all. But the good thing about this is you say, okay, well, why would you do that? Well, if you look at it, I'm saving him $264,000 in interest, because what I'm doing is saying, okay, he's on year 28. Between year 28 and year 15, that's how much he's saving.
Okay.
I think that's a huge deal. That's like, and he brought up the funny thing. He was talking to me in my office. He was like, you know what? That's like buying another house.
Yeah.
And I said, yeah, you're right. Ben, if you look at the overall picture of it, you put yourself in this position, because not only did you put yourself in a position of buying a house, he bettered his position, and now he's looking at rates and taking advantage of where rates are at, because they're still low, and he's saving that much money.
I got a story for you.
Let me hear it.
I don't know if you remember, we had a client about 2 weeks ago. We actually got her into that program with you.
Uh-huh.
I was able to negotiate the closing costs.
Uh-huh.
You paid for the appraisal. I paid for the inspection, and she saved a lot of money. She literally got into a home with literally pennies on the dollar.
Yeah.
So that was pretty exciting.
Yeah, that is exciting. That's good stuff, man. You're helping people. That's what the show's about, helping people. So we also want to talk about, let me say one thing, Chuck.
Yeah, go ahead.
How long does people stay in their house?
Anywhere from 5 to 7 years.
Right.
Because Vegas is such a trendy city.
Yeah. So, I mean, when you have options out there, and I want to tell everybody right now, if you haven't looked at the idea of refinancing your home, do it now. Rates are going to go up. I'm telling you, you're not going to have this opportunity at the end of summer and take advantage of where rates are at. Mm-hmm. Okay? If you're looking to purchase a home, now's the time to do it. It's a perfect storm. Chuck, is it a good time to buy?
That's correct, because you guys have so much options out there. You know, there's so many homes that you guys can pick and choose from. Right now, we're working with a couple buyers. Right. We literally went out and took a look at 15 homes. Right. And we're writing offers on like 5 homes. But here's the story about this. A couple years ago, when he was in the market, he felt like he couldn't really write an offer on the home because he was competing with everybody. But now he's able to sit back and pick and choose the home that he really wants. Exactly. And that's a big deal, especially with a big purchase. What
that says is you guys have options out there now. There's things that you can take advantage of that if you wait, let's say 6-8 months, things that are in the market now will not be there. And you need to take advantage of it today.
But also keep in mind, if you're out there looking at traditional sales, and if they're priced correctly, they will sell. So don't go into a home thinking you're going to get a 40% discount, because it's not going to happen in today's market.
Chuck, let's go right into mortgage insurance. And I want to clarify this. We'll just do a quick segment about this. But most people do not know why mortgage insurance is needed or applied, and what is the difference between mortgage insurance and hazard insurance. Having mortgage insurance in most situations is a waste of money, and I get that. You know, the alternative solution to that is there have been changes to help qualify consumers by providing less mortgage insurance, or even options for less down payment. But the real reason for having mortgage insurance is to help borrowers with a variety of ways to help them get financing, okay? And that's why it's in place. Now, yes, I would say nobody pays it, but there is some things that does have value to it. And I'm going to go into that with you, okay? So FHA, again, you'll have that for the life of the loan. Now, if you're needing to get into a home, or you want to get into a home, and I tell everybody that's a renter out there, in most situations, it's less money to have a mortgage and pay a mortgage than it is to rent.
You're absolutely right.
Even having mortgage insurance. So you might have to suck it up and have it and say, hey, listen, I might have to have it for 2 years, 3 years, whatever. But you know what? At some point, that will be removed.
Okay. And when does that get removed?
Well, you have to remove it by actually going into a conventional loan. Okay. Now, that's not going to ever go away. But if you have no other options, there's a benefit to having that, because that mortgage insurance is really allowing you to put that 3.5% down. Okay. So FHA, you'll have it for the life of the loan. Now, conventional loans, really that's dictated by a blend or a variety of ways, and there's compensating factors to what people look at when you're looking at, well, how does mortgage insurance, and how is that applied to me if I'm getting a conventional loan? A lot of it is dictated by your credit rating. But there's other things that come into play, compensating factors, that will ultimately dictate how much mortgage insurance you're going to be paying on a conventional loan. And that's great, because there's a big difference between mortgage insurance and hazard insurance. Now, mortgage insurance protects the bank. Hazard insurance is something that's applied on the payment in case something happens to your home. You know, you have a fire, you have some type of structural damage, something that happens, something with water leak or something. That's in place to really protect the home, while the mortgage insurance is there to protect the lender. Okay. Now, VA loans, which I tell everybody are the best loan product out there, there is no mortgage insurance, so we're really not going to go over that. But when you look at the fact that, do I have mortgage insurance and why am I paying it? Well, guess what? You know what? You're paying it because the lenders put trust in you, but they're also protecting themselves.
So basically, it just compensates the 3.5%.
It compensates anything that they put down. I mean, there's conventional loan products out there that are 3%, but you're going to be paying for that in a rate. So I don't want to go into detail about that. But
understand.
But I'll tell you this. If you're a person out there and you're looking at options, these options help. We're going to cut the break, guys. When we come back, we got a whole lot of show left. This is Dan French with Nova Home Loans, and I'm here with Chakits Krulsawat from Simply Vegas. This is Dan French here with Nova Home Loans, and we have a caller here on line one. I want to take this real quick. Trish,
Yes.
Are you there?
I am.
Thanks for holding, Trish. What's going on?
Hi, I just recently purchased a home, and I was curious as far as how long I needed to reside in the home before I could refinance.
Well, that's a good question, Trish. Normal protocol on that's about 6 months. Now, you can refinance if you want to, and that's if you're refinancing into a new loan or a different loan product. Now, if you're doing it's like a streamlined refinance, or you're doing something along those lines, if say it's a veteran or VA refinance, then you can do it right away. But really, the protocol to that is 6 months, and it's really for the lenders. Now, if it's really a case-by-case situation, too, with that. I would like to sit down and talk with you, because there is some guidelines and things that I need to go over, and I don't want to go over them with you on the show, but there is some guidelines that I need to go over and make sure that everything checks out for you to do the refinance. But you're doing it at a perfect time, Trish, because rates are low, and you know, if you call outside studio, that's 781-6682, I will set up a free consultation with you, and we can get this going.
Great. Thank you so much.
Trish, I appreciate you calling into the show.
Thanks. Bye-bye.
Bye-bye. Oh, we can help Trish.
There you go.
Yeah. So here's the deal. Let's go back into mortgage insurance, okay? When can you cancel mortgage insurance? Do you know that? When that happens?
I don't.
Okay, you can cancel. You can request mortgage insurance to go away at 80%.
At 80%.
Okay, you can request it. Now, what I've read and what I've gone through, now I haven't had to go through this experience.
Okay.
But the mortgage insurance can fall off at 78%.
Does it automatically fall off?
That's what they say. Now, sometimes banks do not do that. I've seen FHA banks, or banks that have FHA loans in the past. Obviously, now they have it forever. But they had to call in to request to take it off. Now, if you don't see it fall off, then you need to call your servicer and ask them, hey, why am I still paying mortgage insurance?
But before you even do that, make sure you do a CMA to see exactly if you even have that equity even in there.
Yeah. And real quick, if you guys want a free mortgage assessment, or if you have any questions regarding the show, please call in studio today at 257-5396. You can schedule a free consultation at 781-NOVA. That's 6682. And you can also tweet me on Twitter at 781-NOVA. And again, I've told you that you can go to my website if you have missed any shows that we have done and you're interested in maybe getting a little bit more education. DanFrenchNova.com is my website. Chuck, what's your step-by-step process when you're working with a client? Now, give me some ideas about how you approach this.
Oh, the first thing we do is we sit down and have a consultation. And do you know how much it costs, Dan, for the consultation?
I bet it's free.
Free 99. Well, when we sit down with our client, we educate them within the marketplace, market conditions. Also, we educate them on how a real estate transaction works from beginning to ending. And also, we talk about financing. That's very important, because we need to find out exactly how much does that consumer have for cash out of pocket to close out on the deal. Also, we talk about customary practices on how to write an offer if you're writing on a short sale, bank-owned, or a traditional sale.
Right.
From there, the fun begins. We go out, we start looking at homes. The next step is we write up an offer. Once the offer gets accepted, we open up escrow, which is with the earnest money deposit. And that's where we do all the inspections to the property. Then we also order the appraisal.
How long does your consultation stay? I always say mine are 30 minutes. Is yours about 30 minutes? Or?
Yeah, the consultation is about 30 minutes, just depending on the client.
Okay.
Some clients may have more questions, and some clients are like, hey, I already bought 1 or 2 homes. Let's just move forward.
The important thing too is and I've experienced this with Chakits, is that when he sits down with people that I've referred him or talked with people that have met with Chakits, he's very detailed, and he really listens to what the client's needs are. And I think that's a big deal. A lot of people want to just start directing people to where they think they're going to go. Some people out there, we'll talk about this, but they're unrealistic. Sometimes they're like, hey, I want to buy a house that, in a certain area for, whatever it is, and they're asking for really more than they can get, correct?
That's correct. And it's very important that we really educate our clients, so that way, once we're out in the marketplace, we're just not, driving around in circles and circles. And what happens is the consumer gets frustrated, and they get frustrated with their agent. When that happens, that says that I'm not doing my job.
That's exactly right.
Okay. So from the appraisal, what we actually do is we order HOA resale package if it's located within an HOA community. From there, the next step is 3 days before close, we'll go ahead and do a final walkthrough. Then we'll sign docs. Once the property records with the county, then we meet at the property and I hand you over the keys. So that's kind of everything on the, all in a nutshell.
And everybody that I've sent to you, I mean, you're not perfect, but you do handle the big things like I've said, and you have always had a good experience with everybody I've sent over. So, and I think you have a great process over there. I really do.
And also, I do want to mention here that, here's the thing, I don't know everything about real estate, okay? But the good news is that I work with a company, a very big company, that I'm able to get the resources.
Exactly, and that's important.
And that is important. So whoever's telling you, like, hey, I know everything, that's a red flag.
Yeah, I mean, I don't either. And the thing is I think what it is that when you represent yourself well, and if it's something that you can't help with, own up to it, but then find out that answer real quick and get back to them as soon as you can. Yeah. And I think if you do that efficiently, hey, that's going to build all the trust in the world. I
mean, it's just like hiring an attorney. The attorney doesn't know everything, but they know where to get the resources to get that answer. And that's what that is here. So
let's talk about Vegas homes appreciating. And have you seen anything about these home prices growing up here and going higher here the last year?
Yeah, it's actually pretty amazing. There's actually 3 zip codes that I was looking at.
Yeah.
For February of 2015 versus February 2014. I'm going to break off these zip codes really quickly. 89144 in Summerlin.
Right.
Increased by 98%. This is located over here on Charleston in the 215.
Wow.
On the west side of town. Number 2 is 89118 on the southwest side of town, which is increased by 58%, which is over there on Rainbow in the 215. And the third one, 89085, Aliante by 67% on the north side of town.
That's you know what, I was reading something too, and those zip codes are increasing that much.
Yeah.
And I also did a little research of my own, and I found a zip code that really didn't appreciate. But the good news is it didn't depreciate.
That's good. That's always good.
That's always good. So here's the thing. The second year in a row, house prices grew double digits in 2014, and there was only one zip code on there that did not improve. And listen, it will, I believe, at some point. It just didn't improve last year, and that's the 89015.
Well, keep in mind, there's not that many homes out there, but remember that new master plan community is coming out, which is Cadence, 2,200 acres, over, I think it was 13,000 homes. So be on the lookout for the rising, that zip code.
Homes in Henderson Eastern Foothills gained 28.5% since this time last year.
Wow. Don't you live in that zip code?
Yeah. I got a lot of equity.
Oh, there you go. Hey, let's sell it.
Median price homes, on average, finished 10% higher last year. The east side of town, which, hey, we're going to look at this, they had the biggest increase. Wouldn't you think it would be a different zip code? I think a lot of people out there, they deterred away from going to the east side. And you know what? Now they're buying, and now they're walking into equity.
Well, let me add to that, because here's the thing. I pulled up the median cheapest zip codes for the home pricing was in the zip code of 89030. Homes are going for $80,000. 65% of the purchase were actually investors out there.
Wow.
What that tells you is that they're making about a 10% return. Okay. The highest zip code for median homes, $405,000. Zip code 89052. That's in Henderson.
That's a big deal.
And I think what plays a big part about that is the schools and stuff like that out there.
Yeah.
So
that does play a big part. Schools are a big indication of increase, and they relate a lot to that.
And it shows here that about 70% of the people that bought there are actually primary residents.
I think it shows stability. Like stabilization.
Yeah.
I was looking at, stabilization is good because I think all the uncertainty that's out there, I think that's gone. There's a lot of people out there sitting there going, hey, you know what? Should I buy? Should I refinance? Should I get back into the market? Should I start looking for my first home? I'm telling you, right now is the time. We've stabilized. We have appreciation in most of the zip codes out there.
And if you're a buyer, you have the advantage because now you can pick and choose on the home that you want. Remember, a few months ago, it wasn't like that.
Yeah, and I really urge you, everybody out there that's listening to the show, please call us outside studio at 781-6682. That's 781-NOVA. We can answer any questions pertaining to financing and real estate. Also, I wanted to talk about Chuck. You ready? Let's do the lender versus realtor face-off. Are you ready for our
I'm always ready.
You ready for this battle?
Yeah, I'm ready, man. Let me shoot off the first one
Oh,
here.
look at you firing off
today.
today.
Check this out. Okay. Let's talk about gifts. If a buyer does not have enough money and is going to get a gift, is it a certain person that they can get a gift from, and how much can they get?
Friend, family, or relative.
So basically everybody?
Well, not everybody, but they got to be able to source it.
Okay.
They have to be able to, if they don't wire it directly to the title company, then they have to directly find out where that money came from, what account, how it's been seasoned, and how the relationship is to that person. And here's the deal. A gift is really what that says, is a gift. Okay. You can't, there's no obligation. Yeah, there's no obligation like, hey, I'm getting money, so what I'll do is I'll give you money back. You know, if you do that, please don't tell me about it, because, you know, that's not something I'm giving you a loan on. But that's the purpose of it.
And how much can you get?
Well, you can get as much as you need as far as getting the loan closed. Now, let's say if it's conventional, FHA, obviously VA, there's no down payment. But those types of programs or product, if you want to say, those are the ones that will honor gift funds, and those are the ones that will help. Now, obviously, it's a second or investment home. You're not going to have luck getting that.
Okay. Gotcha.
Got a question for you. You ready?
Yeah, I'm always ready. Shoot off.
What is the biggest challenge when working with clients that have higher expectations when they really can't buy the home that they're looking at? How do you change their perception of what they're really looking at versus what they can really afford or what they can really get into?
That's a very, very good question. And that's why it's so important, you know, we sit down with our clients and educate them on what's going on with the market.
I got a caller here, looks like that came in here. Hello, you there?
Hi.
Hi, how are you?
I'm good.
Who am I speaking with? Hello?
Did we lose her?
I guess we lost her. Let's go to Doug. Doug, line.
No, I'm here.
Doug, you there?
Yes.
How you doing today, sir?
Excellent. How are you doing?
I'm doing great. How can I help you, Doug?
Just can you own more than a home at the same time? How many homes can you own at one time? I was thinking of maybe purchasing an investment home here in Las Vegas.
Okay, no, that's a good question. Well, for me, you can own as many homes as you want, but it's really dependent on how many mortgages can you own. And there's a guideline out there as far as what Fannie Mae and Freddie Mac, they look at. You can't own more than 4, but I do have investors that will go up to 10. So if you have more than 4 mortgages, then we can get you up to 10. Chuck, what about you? What is your challenges that you have as far as, I guess, helping people with, buying an investment home or buying multiple homes?
Well, typically with these investment properties, again, we got to educate these clients, because if they are looking to purchase an investment property, especially if they're creating a real estate portfolio, we got to get them in the right track, because it comes down to debt to income ratio. But what I'm starting to find is that these purchasers, what they're doing, these investors actually, what they're doing is that they're not filing the taxes on it. They're making the money and they're just taking it and running, not paying the taxes. Remember, you got to build this thing like a business.
Hey, Doug, how many properties do you own, or how many mortgages do you have?
I have one. I'm looking at the second now.
Well, the best thing to do is I'll give you your options. There's minimum a higher amount down payment. Chuck can go over and talk to you about, what's the best location to buy investment in. And here's the thing, like he's just said, you got to look at the return on your dollar, and you're running it as a business. So, Doug, the best thing to do is call us outside studio. We'll schedule a free consultation, both of us, at 781-6682. That's 781-NOVA. And we'd love to sit down and talk to you, Doug, about getting that investment home you're looking for.
Okay. I appreciate it.
I appreciate you calling, Doug. Thank you.
Bye.
Well, we can help Doug.
There you go.
Couple of...
we got a lot of calls coming in today.
We got a call here. James?
Yes.
James, how you doing today?
Good. How are you?
I'm good, sir. How can I help you? Thank you for calling into the Market Snapshot.
Thank you for having me. I was just wondering, I was denied for a loan. I was under contract, and I want to know why this happened if I was originally approved.
I think maybe the loan officer didn't do their part up front. I think I don't know what your current situation is. I'd have to sit down and look at the details. But I think if you look at the overall picture, a lot of times, we get all the information up front and it looks fine, but then maybe when it hits underwriting, they didn't do the thorough part of looking at all avenues, and maybe it just fell out. And I think I said something about this last show. You want to minimize the big red flags or not have the big red flags. You want to eliminate those up front and then take care of, if there's something that does come into processing or underwriting in my department, my team should obviously have an ability to stop or help with those. But you don't want the big red flags because those are deal killers.
So this should have been all done up front.
Yeah, this should have been done up front, and I'm sorry this happened to you, James. I can always give you a second opinion again. If you can call me outside studio, 781-6682. What we can do is we'll sit down, we'll talk, and I'll look and see why you were denied a loan, and then we'll correct that problem and fix it for future. And hey, if it's something on your credit or something involved with credit, then we can try to remove it and maybe get you in a position to buy a home here shortly.
But I do want to mention that the lender can do their job up front and do their homework up front and get everything done. But sometimes when it goes to underwriting, there could be something where, the potential borrower, bought a new car or added a credit card or something like that, and it could affect it, right?
Yeah, but you really got to look at the fact that James got into this position. He never should have got to the 10th hour.
Yeah.
He shouldn't have, because as a loan officer, if you have experience, hey, this is going to fall out or this is not going to fall out.
Yeah.
And I'm telling you, it shouldn't have happened. I'm not going to say nobody's perfect, but the best thing to do is call me outside studio, because I'm telling you, we'll get to the bottom of this and we'll find out exactly what happened. And like I said, I'm going to paint that picture for you as far as getting back into a home, and we'll set up a game plan together.
Guys, thanks very much. I appreciate the answers.
All right, James.
Have a good one, guys.
You too. Thanks for calling in.
Bye-bye.
All right, Chuck, let's go back to our lender versus realtor face-off. And
we had so many calls, I forgot the question.
No.
No, I'm just kidding.
All
right, to answer that question, education is key. And we got to show our clients the data of what's going on.
Right.
Sometimes what happens is they want to go out and start writing lowball offers.
Right.
You know what? I'm going to give it a shot. We'll do 3 or 4 of them. And at that point, it's, hey, I told you so. We missed out on the property you really want. And at that point, they'll start to understand, like, hey, I really got to listen to my agent. He knows what he's doing.
Yeah.
So we don't really have an issue with that. So.
And you also got to ease your way back into something like that. You don't want to just jump into a client and be like, hey, you can't get that house.
Well, that's why we have to show the data.
Yeah. Well, hey, we'll give you an opportunity. You can look at it, but guess what? Talk to Dan if you're financially, you need a loan.
Correct.
And say, hey, is this something even feasible? What's my payment on it? And then maybe ease them back into a direction of maybe a location or a price that they can purchase, correct?
Yeah. Let me ask you this question right here.
Yeah.
As far as like for programs that you have out there, how do you pick the right program for that consumer? Or do they just pick, or you just say, hey, here's a bunch of programs, pick one?
Well, here's what I like to do. Okay. I like to really find out what the client is looking to do. Just like the caller we had call in, he's looking to buy investment properties. Okay.
Correct. So you got to structure them the right way.
Yeah, you got to structure them the right way. You got to let them know what they're getting into, what's involved, what the details are about getting that second, third, or fourth mortgage. And you really got to kind of paint the picture for them. Now, everybody's different. I'm going to take him and work with him differently and provide different options for him versus somebody that's a first-time home buyer that's going to come in and say, hey, I'm really kind of green. I don't know what I'm getting into. Can you, step by step, can you take me through the process? And then we're going to say, listen, here's your payment. What are you paying in rent if you're paying rent? And so it's just a different way of structuring it. But really, I have a pretty good idea within the first 5 minutes of somebody sitting down about where I'm taking them. I'm just trying to accomplish their goals with whatever program I'm taking them to do. So I got a question for you.
Yeah, fire off.
All right. What is a buyer's broker agreement, and why do clients need to sign them? And I hear this all the time. I'm not in the field. I don't know anything about it. Why do you have somebody sign that?
Basically, it's just an agreement between the buyer's agent and the buyer, saying that, hey, we have a fiduciary responsibility to represent you, and I'm going to go out there and go get you the property that you're looking for. And this is a commitment from me to you.
Okay.
Sometimes buyers are hesitant to sign it, okay, and I understand. But here's the thing. You're going to know up front if that agent is educated, and not only that, if he's a go-getter.
Yeah, and I think if you meet with somebody that, like a real estate agent like yourself, and you're getting the things that you need, I don't see why anybody would not want to sign it if they feel comfortable. Now, there's trust.
That's
you got to have personality that fits.
That's correct.
So those things that got to be in place. But I'm telling you out there, if you ever have somebody that comes up to you like Chuck, hey, can you sign a buyer broker agreement? That should be something that should be a no-brainer, because if you have that much of an urgency with your realtor, if the realtor's giving you the things that you need, you already have the trust.
That's true. And that's
so
correct.
there's no reason to not sign that.
Well, check this out. Let me ask you this.
Yeah.
Banks. You got the bigger institutions. You got the smaller institutions like the mortgage brokers. What's a difference between a bigger bank and a smaller institution?
The biggest thing is that when you have a smaller institution, we're geared primarily towards one specific area. Like my company's geared towards residential mortgages.
Okay.
Now you have a bigger entity, like let's say the bigger banks. They have credit cards. They got other things that they offer. So all of their information, they really have a wide array of things that will allow them to finance somebody or lend money to somebody. So what the difference is really comes down to liability. Now, in a lot of situations, I can provide better interest rates than bigger banks because in some ways, my bank or my company, Nova Home Loans, has a little bit more liability. And since they take on that more liability, guess what? We can provide a little bit better in rate in a lot of situations.
One thing that I really like about your company is the underwriting's in-house versus bigger banks.
And listen,
that's a big deal. It really is.
It is a big deal, and you won't know it until you get into a process of, hey, Dan, you need to fight for me.
Yeah.
You need to go down to the hall and you need to say, you know what? I need this out of underwriting because we need to go to title because we need to hit that close of escrow. Guess what I'm doing? I'm running down that hall. Papers are flying. Yeah. And I'm down there and I'm shut the door behind me type of thing. And I'm like, listen, this has got to go.
Make it happen.
Make it happen. Here's the other thing. I got a question for you, Chuck.
Get fire off.
When you have to request an extension, do sellers and seller agents or real estate agents give you problems if you're the buyer agent and you're asking them for an extension for close of escrow?
Not necessarily. I mean, if you really communicate with the transaction between the buyer's agent and the listing agent, typically the listing agent doesn't want to go through all that. They just want to get the deal done. So does the seller. I mean, if you have a couple days, as far as an extension to close the deal, let's just get it done. But typically when you start working with banks, sometimes banks may charge you up to $150 for the extension. But how do we actually negotiate that? What we do is we request that the EMD to go hard. But before you even do that, you want to make sure that your lender can close and your agent and everybody's all on the same page.
I agree with you, 100%. We got a caller again on line 1. Oh, I guess we don't have a caller on line 1. So, guys, I want to tell you what we can do here as far as what separates us, Nova Home Loans, from my other competitors. Now, I'm going to tell you that most of my competitors, I say this all the time, they really make the lending process harder than it is. They act like it's a tough situation. It's a tough deal to go in, sit down. A lot of them are charging miscellaneous fees. They charge fees that come up that credit pull fee, application fee. These things are not something that my company charges. But I'm going to go right in, and Chuck just touched on this right now. What separates me from other lenders out there is that other lenders, they have some of these things, but they don't have everything. We have everything under one tent. I'm going to tell you, we have in-house underwriting and funding, okay? We talked about underwriting, so I'm not going to touch base on that too much, but it's great to go down and be able to talk with your underwriters and fix any problems that occur. The other thing is funding, okay? We have control over when this funds. We as a Nova Home Loans have a funding department, and we wire those funds to title immediately after us and them signing. Usually there's about a 24-hour window. They're immediately sent. The other thing is we have status online updates. Now, I've sent this out. There's a checklist of things that go out, and once you see that you're in a loan process with me, you're going to see, hey, we're in the appraisal process. Hey, we're going to processing. Hey, we're going to underwriting. That is important. And
I love that. Not all lenders do that.
I don't see anybody. I mean, there might be another lender out there that does it, but I'll tell you right now.
Not the lenders I deal with.
Yeah, I mean, there's not a ton of them. And I'm going to tell you that with that, I follow up with the Tuesday status call, and I tell you where the details are at on that file. Those are usually conditions, or maybe the appraisal hasn't come back, and has it been uploaded? Has something changed? The other thing we're going to tell you is that me and Chakits, both of us, are a 7-day-a-week service.
That's correct. 7 days a week.
I'm answering phones. You know what? I got phone calls last Sunday.
That's right.
And that thing is I never turned him away from, hey, I'm not going to answer my phone. I'm not going to return that call.
Well, you got a call last night. I think it was at 9:30, didn't you?
Answered the phone.
That's right. That's customer service. Talking about that, I was with a client.
He's from Hawaii, though, so there's a 3-hour difference.
Okay. I was actually with a client yesterday. Well, actually, our client. And he said one good thing about you is the response time, Dan. And that's very important out there is the response time.
Yeah, I think that's a huge thing as far as efficiency. And the other thing we have is, like I told you, we have free credit services. And I'm going to touch on what we have for free at Nova Home Loans. And we only offer these free things. We're going to go over this next week. Looks like we are out of time here. But
already?
Yeah, already. You guys, thank you for listening to the Market Snapshot. This is Dan French with Nova Home Loans. I'm here with Chakits Krulsawat from Simply Vegas. Woo. And again, we're here to educate you and provide information on the Las Vegas market.